Hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is Josh Lefler. He is a professional trader with T3 Trading Group. And if you've worked with T3 Trading Group, joined it, or have any interest in joining, you've likely spoken to Josh yourself and will continue to. So, Josh, thanks so much for joining me for this event today.
Thank you for having me. Excited to be here.
Yeah. All right. So, since you're a new guest here, I just want you to introduce yourself for the audience, for those who have been here before, but you haven't been here before. Talk about how you got into trading, how long overall you've been trading, ultimately how you found T3, and then what your role is with T3 at this point.
Sure. So, right out of college, I basically was hired as literally a personal assistant for a guy that was trading his own capital, retail trader, um, large retail trader at the time.
Hmm.
Um, but I literally started like walking his dog and getting his laundry.
Wow.
That quickly turned into him realizing that I was probably utilized better in his office than
Hmm.
outside running errands for him. And so the first 10 years or so of my career,
Oh, we just lost your sound.
I got it.
All right,
Whereas an
there we go.
execution, the first 10 years or so were as an execution trader.
Hmm.
Basically, I would come in the morning. I'd get in at 4 a.m. I would look through probably, and these were the days before all these chat rooms and things existed. So I would look
Hmm.
through about 5,000 symbols. I would find 25 symbols or charts that look good for the day. I'd put them on his desk. He would decide what we were trading that day. And then he would basically just bark orders to me all day long. We were a pretty sizable retail account. So there were days or there were months when we were doing between 30 and 50 million shares, just the two of us. Directional, discretionary trading, no
Yeah.
algorithms, no nothing. It was literally just like feel. This was in the early days of technical analysis too, so like some of that came into play. But at the time, he was probably one of the top, I don't know, 10 or 20 traders in the country, trading, his own personal retail account. Anyway, in those 10 years, we brought that account from 5 million to close to $100 million. So we had really good success together. We were a good team together. He trusted me. That ended up turning into a couple of different things. So um, at first, we became a family office. We kind of made that so that we can kind of do outside investments as well as trading. And I kind of headed up the outside investment side of things. So for like a good 2 years of my career, I sat and listened to pitches all day long, startups, private equity deals, real estate deals. And so I learned a lot about just business in general and kind of, all different industries through doing that. And over those 2 years, we probably allocated, I don't know, 25 to $30 million in deals to the street. Um, so that was a really good eye-opening kind of experience for me.
Hmm.
After that, we became an RIA, and then that eventually led into becoming a hedge fund. When we were a hedge fund, he managed the portfolio and did all the investment kind of strategy and things like that. And I basically learned the whole business side of running a hedge fund. So, creating the docs, working with the lawyers, investor relations, raising money, things like that. We did that for a couple of years. We did okay for our investors. There was no real, bad, we did well. And but ultimately, he was an older gentleman. He was like 10 or 15 years older than me, 55, and just 50, 55. He decided like, hey, I made my money. I'm going to kind of retire. I don't need to sit in front of the screens all day long anymore. I totally didn't blame him, but at 35, I certainly wasn't ready to retire myself. While doing
Hmm.
financially okay, I still needed to kind of figure out what my next steps were.
Yeah.
And so just knowing the business, knowing the firms that were out there, dealing with all these firms over the prior 15 years, I basically knew that T3 was had the reputation, was one of the firms I wanted to be at, and so I came to T3 initially just to kind of be a trader,
Hmm.
put up some of my own money and do the T3 model. It wasn't long before I kind of got to know Derek, who was at the time in charge of business development. And I saw what he was doing. I saw how he was kind of growing the team, saw how he was growing the desk. I had the contacts, I had the knowledge of the business. And so, long story short, eventually joined him in business development. And that was 3.5 years. That was just before COVID. So a couple of years ago, 3.5, 4 years ago. And now I do business development with him. And then once we started T3 Global, I started focusing on that side of the business as well, and kind of growing that and helping to run that side of things.
Wow. Okay. So a long career in the markets, doing lots of different things versus
Yes.
just trade. That's awesome. That gives you lots of different insight into lots of
Yeah.
different things. Okay. So for everyone who's joining us, if this is your first time coming to this event, thanks so much for coming. This is a Q&A event between myself and Josh, but also between you and Josh. So the live chat is open for everyone to submit their questions. I'm going to put a comment in there just so everyone can see where that's at. So submit your questions there. Stack them up for me, and then in the second half of this event, I'll make sure that we go through every single one of those and get those answered. So as they come to mind, or if you have one coming into this, go ahead and put it there, and we will get it answered. All right, Josh. So my first kind of opening question for traders on these events is, how would you grade your week of trading so far? So give me your grade on your typical grading scale, A, B, C, D, F, etc., and why.
I would say probably like a B.
Mm-hmm.
And the only reason why I say that is because first, it's been a pretty slow week for me outside of
Mm-hmm.
today, which also was slow. Um, it's just the month in general. We've kind of been sideways and not really, there wasn't that much actionable things as far as the market's concerned. We've kind of been in this range for the last 2 or 3 weeks or so, between 445 and 430 on the SPY, and like I've just kind of been waiting for things to open up, one way or the other.
Mm-hmm.
So the reason why I would say a B is because well, first of all, I didn't trade Monday, but yesterday I did, I just did something stupid that I normally wouldn't do, but out of boredom and whatever, like I just kind of, and we can get into that in a little bit, but yeah, I would say like a B. I mean, no terrible things, and at the same time, like nothing that really knocked the cover off the ball. So yeah.
Yeah. All right. Well, you mentioned it, so talk to me about what you did yesterday. That's something you wouldn't usually do, and kind of what made you do that, and what you learned from
Yeah, so we are currently in a what I would call kind of the small cap summer right now.
it. Mm-hmm.
Obviously, small cap stocks have been like going, through the roof, um, a lot higher and a lot bigger moves than I would consider normal or even reasonable.
Yeah.
But that being said, the market's going to do what it wants to do, and so every day you get these like silly small cap names that low short, like low float, high short interest, and people are running them. And while I try to make it a point to like stick to what I do and stay out of like the nonsense and like the hoopla and stuff that's going on in the back, behind the scenes.
Mm-hmm.
There happened to be the stock yesterday that started to go EAST, and I just couldn't resist and literally bought it for no reason in the middle of the day, on a little bit of a pullback to like intraday, like the daily 80, I mean the intraday ADMA, and then I think the thing like instantaneously went down $1.10 and
Mm.
halted and then halted again, and it was just literally a completely stupid trade that I would never do. But again, it's on a slow day. Sometimes you're sitting in front of the screens. It's like definitely the better move is to just get up, walk away, walk the dog, do something else. But like at the same time, a lot of us are screen junkies. We sit here all day long,
Mm-hmm.
and sometimes like we let some of the talk and hype that's going on around us get the best of us. And so that
Yeah.
would be an example of something that I normally would not do, but ended up doing yesterday, and it just was stupid. And what did I learn after the fact? Not to do stupid things that I know not to do. I mean, I knew it go like it was just stupid. There was no rhyme or reason.
Mm-hmm.
It was literally something where I was like, hey, and even what's even crazier about it is like, wherever I bought it, I was maybe going to scalp it for like 40 or 50 cents, but then I'm losing $1 or $1.50 in it. It's like that risk reward makes absolutely zero sense. That's the easiest way
Mm-hmm.
to get yourself out of the business, especially as a beginner trader. But again, 20 years in the business, I've been doing this a long time. I've seen a lot, and
Mm-hmm.
sometimes you just do stupid things and you let
Mm-hmm.
it get the best of you, and that's kind of where that's at.
Human. You're still human, even
Human.
if
There
you're a
you go.
professional
Exactly.
trader. Yeah, for sure.
Human.
Um, so you mentioned that that's something you wouldn't usually do. That's not the type of trade that you're chasing on a day-to-day basis. So each trader has their own style, their own strategy that they kind of lean on, and that's what they do daily. So talk about what your strategy is, what your style is when it comes to trading.
I would say I'm a contrarian trader, that looks for price action and typically takes the other side of price action. So things
Okay.
that move, 10, 15, 20% in a straight line over a couple day period, I'm usually looking to take the other side. Things that gap up, I'm usually looking to short. I'm also like a perma bear. I always have been. I always will be. I don't know why. That's just my kind of personality and nature. So I am always, at least not always, but in the last, kind of 5 years, I'm more apt to play the short side of things than the long side of things. And so, like today is a perfect example. IWM, um, the been in a straight line from um, 180, 180 to 190 over the last 4 days, regardless of what CPI did today. If CPI came in super hot, chances are IWM would have gapped down and I would have had to short it in the hole. And that probably would have been a tougher trade than if
Mm-hmm.
CPI came in the way it did, which caused us to kind of gap up and, fifth day up, 180 going to 193, like that to me is a screaming short. And then one of two things is going to happen: either it's going to fulfill that extension or fulfill that kind of gap, and you'll take most of your profits there, and then you'll leave a little bit to either see if, okay, does that continue and actually reverse this kind of 5 day 4 day move that we've had, or
Mm-hmm.
do we retrace back to highs, which we did at one point. We closed kind of weak on the IWM, but again, it's like just this small cap nonsense. Like to me, is could it continue for longer? Yeah. Do some of these things deserve to be here? I definitely do not think so. Um, Going into CPI this morning, it was basically like, okay, if it comes in soft or if it comes in cooler than we expect, and they gap us up, like to me, I was definitely looking to short that gap up. And I think, the IWM was a perfect example, perfect trade. Um, and also we've kind of had this like, you know, softness in the queues over the last 2 weeks. Well, not softness, but kind of sideways action in the queues
Mm-hmm.
while IWM is running. And so the number like that comes out today, and I'm thinking, okay, you know, if anything, they'll probably look to buy the Qs and break those out versus, continuing to run the IWN. And that's
Mm-hmm.
kind of what happened from the open. I mean, we saw
Mm-hmm.
early strength in tech. I mean, NVIDIA ran real quick, and some of the others did as well. And some of these tech charts, like, honestly look amazing right now. But at the same time, like I look at some of these like smaller cap stuff, like the Carvanas of the world that have gone from 20 to 50 in a
Mm-hmm.
2 week period or 1 week period, and it's just what's changed about their business model in the last week? Nothing that I'm aware of, other than the fact that people are talking, people get excited, and that's what kind of moves markets. Like
Mm-hmm.
markets work on things can't last forever. Things can't go in a straight line forever. So
Right.
when you're playing the contra game or you're playing, the contrarian game, basically, as long as you can kind of size and time it right and average in at the right times, you should be able to catch some sort of pullback. And it's, it's a game that I learned from the guy that I learned how to trade from, and it's not necessarily, um, it's not necessarily for everyone. Like, but it's the complete opposite of momentum trading, right? Like, so
Right.
I can I know tons of people that can buy Carvana today or that can buy Carvana yesterday on that kind of, breakout. But for me, I look at it and I'm like,
Mm-hmm.
it was just 24. Now it's 34 going into yesterday. Like, I like bargains. I like discounts. There's no way I'm paying 34. I don't care if the thing goes to 70. Like, that's just not what I do.
Mm-hmm.
And something I learned very early on um, is everybody needs a style, and nobody
Right.
can be great at all styles. So you find the style that works for you, you stick to it, you don't veer from it, and that's how you make money.
Mm-hmm.
And no one's going to be great um, at everything, right? You have a professional sports team. You have different positions. Everybody has their kind of own unique role, and they're good at what they do. But all of a sudden, you start putting, an outfielder to pitch, and things are going to go a little awry. And that's kind
Mm-hmm.
of how I look at, finding a style and finding what's important to you. Everybody needs a style. Everybody's style is different, but what's important to learn to trade is to figure out what style is good for you and kind of stick to that and perfect it. And then you can kind of branch out from there. And again, like that EAST, not what I do, but
Mm-hmm.
just one of the, like, and that's a perfect example. You
Yeah.
step outside step outside the line and you shoot yourself in the foot, so to speak.
Mm. Your style is arguably very different from a lot of traders I've had on this event. Derek, for example, really prefers to play the long side. He doesn't love to short the market, and as you said, you're kind of a perma bear, and so that's really your style. How how is it for you working alongside other traders who do have very different styles from you, or those who might have similar styles to you, and deciding how you collaborate on ideas or get ideas from other traders on the team?
Yeah, I think it's actually great. And then the reason is there's times when Derek can be buying a stock, or some of the other guys on the floor can be buying, on the desk
Mhm.
can be buying a stock, and I could be shorting a stock, and we can both make money in the same day.
Mhm.
Um, what works great about being in a team environment or being in a group environment is, if I got all these momentum guys that are looking at one thing and I'm looking at one thing, and we both kind of see the same thing,
Mhm.
well, okay, now I have like almost, I have the highest conviction of possibility that, okay, that's going to actually work, right? Derek
Right.
has a totally different style than I do. But at the
Mhm.
same time, him and I are looking at the exact same setup on the exact same stock, but we have two completely different styles. Well, you get two guys that have two different styles that are looking at the exact same thing and looking to play the exact same way on that same day. Like, that to me is like, okay, two things are aligning, and that, super high extra conviction on something like that. On the flip
Mhm.
side, um, I saved myself a lot of money, or these guys have saved me a lot of money. Um, when I hear, okay, these guys are, buying this and playing this momentum name or buying this breakout or whatever it is, and then I'm like, okay, well, maybe I should take a step back and not short it yet.
Mm.
And just take, and it just gives me like an extra kind of layer of probability to say, okay, well, normally I'd be shorting it now, but these guys are like looking to buy it, so maybe I should wait till they're like, okay, I'm finally trimming some, or I'm
Mm.
getting, this is a point where I might be selling some of my longs, and I'm like, okay,
Mhm.
well, I like the short, I waited this long, now they're going to start to trim, so I'm like, okay, well, now might be the time for me to really look at the short, or really
Mhm.
look at the other side of that trade. um,
Do
and
you
then
feel
the
like Sorry, do
Yeah.
you feel like being in that team environment gives you like a better sense of market sentiment that maybe doesn't align with your own, and then that helps you be able to make decisions on when to enter a trade?
Yeah, and I think it just gives you like some clarity just in general. Like, trading is a very, I say this to guys all the time when I talk to them on the phone.
Mhm.
If you decide in your heart of hearts that you want to be a professional trader, that you want to be a trader for a living, and you want to actually attempt to do this, I
Mhm.
don't care what group you join, but you have to find a group to do it with. You can't do
Mhm.
it alone. Trading is a very lonely game. It gets very it gets very you can get in your head, you can contradict yourself, you can second guess yourself, you can, you know think twice, whatever it is. But like, if you're just sitting there by yourself with nobody to talk to, right? I don't care if there's 200 guys in the room, and I say, hey, I like this, and all the other 199 of them say to me, you're crazy, that's terrible. But it's at least a sounding board to be like, hey, here's what I'm thinking, what do you guys think? But if you're just sitting
Mhm.
there by yourself and you have nobody to kind of bounce it off of, you can really like talk yourself into doing things that you wouldn't normally do without having like, kind of a voice of reason or, a sounding board to kind of bounce ideas off of. So yeah, I
Mm-hmm.
mean, I think totally a group, again, whoever it is, like you need to find a group that you mesh well with, that you think, you know, adds value to whatever you're doing. And then figure out how to extract that value and make it work for what you do.
Yeah, great. All right. So you kind of already mentioned that you did already mention the CPI. As we know, it came in lighter than expected this morning. It's kind of the big news of the day for the market. We had the lowest headline CPI since March of 2021 on an annual basis, the lowest annual core CPI since August of 2021. I mean, these are numbers that we're kind of expecting to see. We're expecting to see it get back down, especially with the base effects of comparing, year over year to last year. You already talked through kind of your strategy heading into this session. So let's talk about the market reaction and how you played it. So the reaction was strong, as you mentioned, the Qs rallying, the Dow up, the S&P, all the major indices rising in the futures rising right after the release of that report, and then hold those gains holding throughout most of the day today. So how did you trade the reaction to this inflation print? And did it go along with the strategy you were planning ahead of time, or did you have to change your strategy throughout the day?
No, I mean, again, like to me, there's always going to be headline chasers, right?
Mm-hmm.
And coming into CPI, knowing where we've come from, right? That moment, granted, if we came in, at 1% and we were past like we were already below like the Fed's target, is that a different story? Yeah, probably. But even then, like
Right.
let's say SPY gaps up 4%, like it's gonna have it's gonna have a sell off at some point because there's gonna be guys taking profits. Again, it's a
Right.
matter of how much it sells off. Does it sell off, do a complete reversal and go negative and take out yesterday's high? That's the kind of game that you play when you're like looking to fade moves or play the opposite side of moves. So for me, a big indicator going into, important economic events like this, or even earnings, like more so earnings, is I like to look at the implied move um,
Mm-hmm.
through options. I ask guys, hey, what's the implied move, into this event, or what's the implied move for today, and they give it to me, and then I kind of use those as levels to kind of start where I'm gonna do whatever I'm gonna do. So today, I
Mm-hmm.
think when I came in this morning, I think it was actually Derek who said it was like 1% or something like that was the implied move if things came in line or a little better than expected, a little worse than expected, somewhere around in line or somewhere around, a little bit better, a little bit, not anything crazy. And so that's kind of where we were. Like when I started,
Mm-hmm.
my short, like we up 1%? No, I think we were up like, 0.75%
Yeah.
or 0.8% or whatever. But I'm comfortable starting there because if we go up 1% or we go up 1.5%, I leave myself enough room to kind of add in at a bigger amount. So dollar cost averaging for me, and this is where I think a lot of guys get this wrong. Um, a lot of guys will do tranches, right? They'll say, okay, I have 5 different tranches that I can, 5 different bullets that I can shoot at this, and they do it in
Mm-hmm.
equal levels. If you do that in equal levels, what I find a lot of times, or what I used to find a lot of times, is that you're really just trading to get back to break even,
Mm-hmm.
and you're not there for the move, and you're not there to kind of get to make money. It's really just you're scaling into these levels, and then as soon as you get that little correction, you're basically like scaling back out, and when all is said and done, you're breaking even after doing all that work, averaging in and averaging out, things like that. So I now try to do my smallest size on my first entry, and then gradually do increasing sizes on later entries. That way it really improves my average costs, so that when I
Yeah.
do even get the smallest correction the other way, then I can take off a big amount of that size. Now I'm back to even from a much better price than I was, and then I can
Mm-hmm.
kind of trade around that. So that's kind of been the big difference for me when it comes to like dollar cost averaging and, scaling into things, is really learning how to start small and get bigger on each additional ad versus doing equal size ads and just scaling out for the same quantity.
Are you mostly day trading?
Yeah, I would say I mostly day trade. I will take things overnight occasionally. But in this market, like in this market, like the volatility, like not so much lately over the last couple of weeks or so, but like a couple of months ago, I mean, the volatility in specific names, I mean, it's still true
Mm-hmm.
today. Like it, Nvidia is up $10 one day, it's down $12 the next day, it's up $15.
Mm-hmm.
Like you're talking about moves that 10 years ago on a
Yeah.
you would wait 3 weeks for the
Right.
same move that you're now seeing literally in 3 hours. So I used to hold overnight for that same kind of move, but if I'm getting the same move on an intraday basis, or I have the potential to get the same move on an intraday basis, for me it's a lot easier to kind of do it on
Yeah.
an intraday basis. But
Right.
I'll hold things from time to time, especially if it's like a core position in a certain ETF or something like that that I want to kind of be in, but it moves slow, like a Labu or something like that moves slow and it's not really easy to time it intraday. It's more like again, like that moves so slow and the beta is so small that it's like, okay, I have to kind of wait it out over a couple days for that kind of move. And but then you have like the Nvidias and the Teslas of the world that you have to wait 15 minutes to get that same kind of measured move. So
Mm-hmm.
um, I think it really just depends on the names that I'm trading, what's in play that like at that kind of time or around that time. But I would say lately, yeah, I've been mostly day trading and not holding overnight because we're also in a very like choppy market. We're up one day,
Right.
down one day, and there's nothing really changing why. Like there's no, we'll gap up, we'll gap down. So to me, it's like if you're going to hold overnight, it's really just, you might as well flip a coin at that point, and you
Mm-hmm.
probably have the probability is not on your side for you to be right more than you're wrong in that instance. Um, but like the times I'll hold overnight are like, if we gapped up 1.5% today and closed up 4% today,
Mm-hmm.
if my mentality coming into this morning was, okay, I'm going to short, um, you know, on whatever pop up we get after the CPI, and that didn't actually happen, and I didn't get the correction, and we were now up we closed up 4% with like a crazy, last hour like extra 2% that they added to the rally. That's the
Mm-hmm.
time when I would go home short overnight, because again, like things don't go in a straight line forever. I know it's like, everybody thinks they do, but they don't.
You mentioned the extreme volatility that we're seeing. We've been seeing major volatility in this market arguably since 2020, 2021, still happening now, 2023. What How do you explain that phenomenon and that major shift in how the market moves? Is it just there's so many more
Social
people
media.
involved?
Yeah, social media and more people involved.
Yeah.
I was having this conversation with somebody the other day on the golf course. If if there's a stock out there that's a meme stock or a one of these crazy like Discord stocks, or whatever, wherever people talk about stocks that gets things going, right?
Mm-hmm.
If 1 million people view that post and they all buy 100 shares, that's 100 million shares. That moves stocks.
Oh yeah.
That's institute like 100 million shares is market, like that is market moving. So I think, you know, just everybody from COVID sitting at home, you got, the next generation of people graduating college, arguably with more savings or more discretionary funds than when I came out of college. It's just a
Yeah.
different kind of time in the world. Um, and so when there's that extra kind of discretionary money to go around, I think that's what kind of drives things into these extreme volatilities or extreme moves. Again, like 10 years ago, 15 years ago, unless you had a Bloomberg or unless you had like paid for a
Mm-hmm.
service to know that, PWM was up 100%,
Right.
outside of your broker calling you specifically and being like, hey, I just want to let you know about this PWM. Like now, anybody can go on social media and there's a
Yeah.
million places you could see like, hey, PWM is up 100%. Oh, it's up 110%. Let me call my friend. Oh, let me text my friend.
Right.
And before you know it, it's like momentum. That's just kind of what drives momentum. It kind of piles in, but eventually that, like, again, like that can't continue forever. Eventually there's like, you don't want to be the last man holding the bag. Like,
Mm-hmm.
eventually that has to, there's going to be time, there's going to be the guys that are looking to short it. At the same time, there's going to be the guys that are looking to take their profits. Okay, I just bought it at 50, now it's 60. I'm definitely taking my $10. At the same time, the guy that was looking to short it is looking to short it at 60. So that's what kind of drives these like ebbs and flows of this volatility, is like, is in my opinion just the access to information, access to market kind of metrics, and kind of access to just talk in general.
Mm-hmm.
um, and that's just not what it was 10 or 15 years ago. Even five, like, this is a completely different game than it was 5 years ago.
Mm-hmm.
And I think you know the guy starting today literally has a lot better chance than the guy that was starting 20 years ago to actually make it as a trader. And the reason I say that is because 20 years ago, if you weren't in the know, if you weren't a big institution, if you weren't doing business with some of these bigger desks and things like that, you were kind of just flying blind on your own. And
Mm-hmm.
now there's there's kids out there that are writing reports that like that GameStop report that kid wrote, like that blew away any analyst report I've ever seen. Now, granted, did it deserve to ever go up to 5? No, definitely not. But he had the right idea and he had the right like
Mm-hmm.
notion. Like, hey, this is a stock that has a hundred larger than 100% short float. Like,
Right.
if anything gets this thing going, like it's gonna go, and they're gonna be forced to go. And he would like, but he's writing a report that are better than most analyst reports that get paid
Mm-hmm.
hundreds of thousands of dollars for a living. So just that access to information and that kind of access to share that information and share ideas and things like that, I think is what really drives volatility in this market, in my
Yeah.
opinion.
I think this is a great spot for our first audience question. It comes from Cameron. He asked, how has your trading changed from when you first started?
Yeah. So when I first started, technical analysis was not a thing.
Mm-hmm.
In fact, we used to literally, when I first started, we used to literally get a book of paper charts that were mailed, like that were delivered to us on Sunday nights.
Wow.
I forget if the guy dropped it off. I forget how we actually got it, but we would literally get at the office a book of paper charts for that week, for the prior week. And so nobody was talking technical analysis. You would look at the charts, you would put that together with fundamentals. And so 20 years ago, fundamental analysis was probably 95% of the thought process, and like 5% was technical analysis.
Mm-hmm.
Now, again, with some of these moves and something like, you have that, what was that? Oh, RXRX signed a $50 million deal this morning with Nvidia, and the stock gained $2 billion in market cap before the market even opened.
Mm-hmm.
That doesn't like add up. Does 50 million from Nvidia equate to maybe, yeah, another 2, 5, 10 billion 5 years from now? Sure. But that day to add 2 billion in market, like
Yeah.
it just doesn't make sense. And so I would say 95% back, 20 years ago, 95% fundamental, 5% technical analysis. And then today I would say it's literally the exact opposite. I would say you can make a career and be a professional trader and make a phenomenal living and literally know nothing about the company you're trading. You don't
Mm-hmm.
have to know what they do. You don't have to, like, it can literally, they can make cogs on a wheel, or they could be producing cars, or they can be producing corn or wheat. Like, it's just a chart. And so I would say that's really what's changed over the last 20 years, is literally the shift from kind of how important fundamental analysis is to how important technical analysis is. And I think what really is the proof of that is just how difficult your typical long short hedge fund is doing in this environment. There's like, by the time they figure out how to reposition and get on the other side, now it like they're just so far behind the ball because things are moving so quick, and like, you know, it's just a very difficult environment for, you know, what used to be, you know, 15 years ago, a phenomenal environment for like a long short fund. Now it's like almost impossible to be running a long short fund, and if you're doing well as a long short fund, then, you know, it's very impressive because using that same kind of fundamental analysis and fundamental kind of, you know, insight is just not what it used to be. If you wait long enough, will it play out that way? Yeah, eventually you'll be right and the fundamentals will matter. But in the volatility and the extreme short-term moves, it's like, you know, the fundamentals get thrown out the window, and then, you know, the only thing that you really have to rely on is technicals, because without that, like, then you really don't have anything, and then it's, you know, you might as well just make it a, you know, red or black, or, you know,
Mm-hmm.
flip a coin, or, you know, whatever you want to call
You mentioned that your personal trading style is, you called it contra trading, like trading the other
it.
side of kind
Contrarian,
of
yeah, contrarian, yeah.
contrarian. So trading, you know, the other side of what the kind of popular opinion is, or maybe the trend is. Has that always been what you've liked to do, or how did you get into that style of trading throughout your 20 years in this career?
Yeah, I mean, it was, again, it was just something that was taught to me. I was taught like very early on, markets move in threes, fives, and sevens. I have no idea why. I don't know where that started from,
Mm-hmm.
but it's true. Like on the third,
Yeah.
like, you know, 3 day move, on the third day up, you're looking to short it. Or, you know, if you're wrong on that, then it's probably the 5th day up, and if you're wrong on that, it's probably the 7th day up. It's
Yeah.
like they like, it's just like an old kind of notion that like that's how markets move. I actually think it has something to do with like how settlement worked, and like, you know, because settlement used to be T+3, and so like that kind of had something to do with it, because now you're repositioning money. Like, you know, you sell something, you have to wait 3 days for it to settle. Now you can put that money into something else, and so that's, you know, kind of what I
Hmm.
think started that originally. I don't
Yeah.
really know for sure, but it's kind of my inclination. And so, yeah, I mean, that's just kind of the way I was taught. I was also taught there's only a finite amount of money in the markets.
Yeah.
And so all markets are really about is rotation.
Mm-hmm.
Money is always rotating, whether it be from sector to sector, whether it be within a sector, from, you know, one stock that's doing great to another stock company that's not doing as well, whether it be from, you know, the tech to, you know, the Qs to spot, you know, whatever that kind of rotation is. If you can kind of find those pockets of rotation, that's where you can really be successful, especially as a contrarian trader. So guys will buy a certain sector for a couple of days, right? They do well on it, and now that
Mm-hmm.
money has to rotate out of that sector into a new sector. So
Right.
the one sector that it's rotating out of just had a great run. Well, guys are going to be selling, and at the same time, you're going to be looking for guys to short. So you're going to kind of get that turn there. And the
Mm-hmm.
sector that it's going into that was kind of left to lag for the first, you know, for the last couple of days is where you're going to kind of get a bottom in that sector. So
Hmm.
that's kind of the theory behind, like, you know, contra trading, or, you know, looking for rotations. It's all about, you know, price action, and kind of just seeing where like where the real money's rotating to. Me, I'm
Hmm.
not moving a market. You know, it's the
Right.
pension funds and the guys like that. That's who's really moving markets. But again, they can't do it in one day. So while you get these crazy like momentum names with the retail traders, like I was talking about, the real kind of thick, like, you know, heavy buying, like if I'm a pension fund and I want to all of a sudden start buying, you know, a tech stock or the tech sector that I like, you know, it could take me a month to work that order, or a month to kind of get the money into there. And so, you know, that's what kind of leads trends to continue. But at a certain
Mm.
point, like, that stops and it moves into another sector, and you kind of have to, a month is probably too long, it's probably, you know, a week or two, but that's what
Mm-hmm.
kind of leads to money rotating and kind of waves in the market, in my opinion.
What are the indicators that you're using in your personal trading on a daily basis to identify these trends and these rotations that you're talking about?
So I am a very simple chart person. I don't
Mm-hmm.
have much on my charts at all. I have a couple of, you know, moving averages. I don't have RSI. I don't have MACD. I don't have Bollinger Bands. I don't even know, I couldn't even tell you what a Bollinger Band was if I looked at it. Like, I mean, that's a joke, but I don't use any of that stuff. But there's some
Right.
other traders, like, a couple of my colleagues that, I'll look at their chart and I'm like, well, where's the chart? There's so many indicators on there. I can't even
Mm.
find the actual chart, but it works for them. For me, I like clean and simple. And again, I've been looking at charts for the last 20 years. The first half of my career was literally dedicated to just finding chart, setups, or, whatever you want to
Right.
call it. And so I think that I just see a lot of it like I don't need to draw support lines. I don't need to draw resistance lines. I don't need to draw channels. Like, I can just kind of see it on a chart.
Mm-hmm.
And so for me, I just look for, I keep it very simple. I have, like,
Yeah.
volume is a huge indicator for me. Obviously the candlesticks that I have, and then I have, a few basic moving averages that I use. Now, since I've come to T3, when I met Derek, like, who happens to be one of the better intraday extension traders that I know, or
Mm-hmm.
that I've ever seen, he taught me a lot about shorter time frames, 5 minutes, 15 minutes, inside bars, extension on what price correction means, what time correction means. Like, I used to just do that all as a feel thing, but
Mm-hmm.
putting that feel together with some of the more like actual indicators that he's explained to me and taught me how to see and spot, like, that has really been a big helper as well. And so, I learned, like, in the last 5 years I've learned probably just as much as I learned in the first 15 years. It's just a totally different set of knowledge, set of skills. And I think, you put that together and it makes you even better. And then I also think that you should always be learning as a trader. The day that
Mm-hmm.
you say to yourself, like, the day that a trader says, "I got this, I know it," I promise you, the market or whatever stock you're in will humble you like you've
Mm.
never seen before and will absolutely wreck you. So you just always have to be, like, open to the idea that somebody out there knows more than me. The market knows more than me, and I should always be learning and always be evolving and always be trying to perfect this craft, because that's what it is. It's an art, right? It's a
Mm-hmm.
skill. It's a professional athlete. Like, you should always be training. You should always be working on your skill set. You should always be trying to better yourself, because that's what's going to better your performance in good markets and in bad markets.
Mm-hmm. All right, another great lead in for our next audience question. He comes from Ryan, and he asked, "Who are your trading mentors at T3 or elsewhere?"
Yeah. So the original guy I learned from is 100% my lifelong mentor, both personally and business wise. I still talk to him every day. I still go out to dinner with him. I still grab drinks. Like he'll be, a second father to me for life.
Mm-hmm.
And so he's a huge mentor to me. And then guys, here at T3, I would say, Derek is a big, like, influence on my trading. Um, uh, Sean, the CEO, is a big influence on just me and business and things like that. And so there's definitely people here that I can look to for advice, or look to try to help me get better at what it is that I'm doing. And
Mm-hmm.
I think that's important just in life in general. You should always have
Yeah.
somebody that you can, again, it's like, it's like finding a group in trade. Like, you should always have somebody that you can bounce ideas off of, or that you trust their advice, whether or not you like it, but at least it's somebody that, like, if you go to them, they'll give you their honest opinion on kind of what they think of it. Sorry about that
Yeah.
noise in the background. I'm in the office.
Oh, it's okay. On the flip side of that, you yourself, in your role with T3, you're involved with, onboarding new traders, helping new traders, mentoring new traders yourself. So, how has your work with other traders on that side of things influenced your trading and, yeah, your trading?
Yeah, I have been in this business long enough to see probably 10,000 traders fail
Mm-hmm.
and less than 1,000 succeed.
Mm.
That might be an exaggeration. Let's call it 1,000 fail and less than 100 succeed,
Mhm.
because that's the nature of this business.
Right.
But I see the same things happening. Like, guys fail for the same reason over and over, and
Right.
then the guys that succeed kind of succeed for the same reason over and over.
Mhm.
And so I have I've been able to kind of find what it is that makes traders fail, and then I can help guys steer them in the direction to stay away from doing those things.
Mhm.
Taking a gamble just to take a gamble, I don't care how right you think you are going into an earnings call. Oh, I love this. They're going to crush earnings. You don't know. You don't know. But there's certain setups that work and things like that. So thinking you're right, having the stock show you the opposite, and refusing to admit when you're wrong is the
Mhm.
number one reason why guys fail, right? Because they run out of money.
Right.
You could be wrong 90% of the time in this business, be right 10% of the time in this business, and still make an incredible living if you're willing to admit you're wrong. So if you get involved in something and you see very quickly, this isn't working for me, get out. Who cares? There's going to be another 20 trades that day. There's going to be another 50 trades that week. There's always another trade if you still have money to trade.
Right.
When you run out of money, you can sit and look for trades all day long. It's not going to matter because you don't have any money to do it with. So it's
Mhm.
it's all about risk management. It's all about managing your capital, whatever your capital is. You have $50. Well, manage the $50 the way you should. You have
Mm.
$500,000, manage it the way you should. You always want to leave yourself in a position where a single trade is not going to end your career. And at the same time,
Mhm.
you're in the position where trades that work are going to make your career.
Yeah.
You look back at guys that have been really successful in this business, and I promise you, they can count on one hand what gave them that next boost to the next level and that next boost to the next level. And
Mhm.
then you look at guys that haven't made it in this business, and they can also count on one hand the trades that actually took them out of the game,
Right.
because they were too stubborn to admit they were wrong, and they were too stubborn to kind of say, hey, I gotta bail on this. The
Mm.
hardest thing to do as a trader, it happened to me yesterday in Roblox looked phenomenal yesterday on the gap up. It was strong in the morning. For me, I was like, okay, I'm going to use the opening 5-minute bar. Like, if it gets below there, I'm stopping out. I did. They made it very difficult, and I'm sitting there all day, and I'm like, God, I did happen to buy back a little when it made a little pivot lower, but I didn't make back my entire loss. But the fact that I stuck to the plan, and I
Mhm.
that keeps me in the game for the next trade.
Right.
But if Roblox never recovered yesterday, and it just went straight down, when do you stop? When it hits zero? You gotta come up with a game plan that you're going to be able to manage, and then stick to that game plan. It's all about game planning. It's all about execution on game planning. Anybody can pick a stock. My 7-year-old son, I'm pretty sure I can go to him and say, what's your favorite company? And he would tell me, Apple, Roblox, because he knows these products.
Mhm.
But executing those, right? And Apple's up, whatever it's up from COVID lows, Roblox up,
Mhm.
whatever it's up from the IPO or the original. But it's all about executing the ideas. A good
Right.
trader can trade his way out of anything. A bad trader says to you, oh, I had that, but I gave you that. I can give you
Mm.
anything. It's all about executing those ideas. Finding
Right.
ideas, 5% of it. Executing the ideas, 70% of it. And we're executing ideas, the 95% of it mixed with psychology. And psychology is a big part of the game too. And I think I understand psychology of the markets, which also helps me to kind of succeed as a trader.
Mhm. Our next audience question comes from Eddie, and he is a trader with T3 Trading Group who works alongside you. He says, thank you for helping with me daily. He said,
I know Eddie,
since,
and he's a good guy.
yeah, so since you're in the development team at T3, does the team ever consider incorporating new AI related, machine learning related, risk analytics tech into our tent, maybe as a risk management tool or an algorithm trading tool, as AI is gradually getting more trendy?
Yeah, we have a lot of that stuff that we have conversations all day long with fintech companies, companies that
Mm-hmm.
are, coming up with this risk management. We have, programmers that do algorithmic stuff here for risk, for, tracking certain metrics and things like that. So yeah, I think it's important to be kind of on the cusp of that, or kind of in the know. Um, but uh, we're still in very early stages of that whole thing. And
Okay.
so, um, and I'm not saying us T3, I'm just saying the world in general is in very
Yeah.
early stages of AI.
Right.
I look at it very much like, the original tech boom, that happened in the late 90s. Like, there's going to be 1,000 companies that there's going to be 1,000 startups, 5,000 or whatever. There's going to be a million companies that say, okay, we're going into this for AI.
Right.
There is no shot they all make it, right? There's going to be, 10% of those or 5% of those that actually make it, actually drive it, and actually continue to succeed, right? The Amazons of the world that made it, while the, the whatever, think of like, while the Yahoos of the world don't, like, there's certain companies that, and Yahoo's a bad example because, they had that, what happened to them, but there's going to be companies that, or broadband, or one of these companies that, like, they had a huge valuation at one point, but when the tech
Mm-hmm.
bubble burst, it just, they ran out of money, it didn't work for them. At the same time, like, there's going to be ones that come out on the forefront and continue to succeed, and then, quite honestly, probably are, our next Apples and Amazons of the world. But
Right.
I couldn't tell you what those are today. But I think it's important to always, like, be reading, always be, doing research and finding out, who's, got their hand in this, or who's doing this. And it's just important to always kind of know what's going on. Just in life, it makes you smarter, and in trading in general.
Mm-hmm. The next question is from Ryan. He wants you to talk about your recent big winner and a recent big winner trade and a big loser trade. What made them work and not work?
Yeah, I mean, I think the EATS is a perfect example of a big loser that I had yesterday. I mean, it wasn't a huge loser, or sorry, EAST. It wasn't a huge loser, but again, it was just a stupid, like, I never should have done it. My biggest trade, let me think. I got a couple. Let me just look at the ones that I'm, like, thinking about that really I did well on. Um, I think, like, in June of 2022, I was buying Labu, like, in the consolidation here, like around the 5 level, and eventually sold it at like 10 or 11, like on a $5 stock that doubles with decent size. Like, that was a really good winner for me. Um, I can tell you, like, uh, 2008, 2009 were, like, really good years for traders. Like, I know it's going a long way back, but,
Yeah.
like, those were really good. Yeah, I mean, you could just literally see guys shorting, and you could step in front and short in front of them, and you can kind of read the
Mm-hmm.
tape a little better and things like that. I'm trying to think of another really, because I had a couple beginning of this year that, like, worked out really well, and they're not, like, sticking out to me. Oh, Tesla. When Tesla went down to, almost $100 a share,
Mm-hmm.
everybody was writing the company off. Tesla's going out of business, and, like, I hate Tesla. I hate the company. Clearly, the man's like somewhat of a genius, but at the same time, like, I still am always looking to short Tesla, but at $100, like, I was comfortable saying, hey, this is a pretty good spot. Um, as a trader, it's hard to kind of be there forever. So, um, at $100, I was, selling at 140. You're talking about, almost 50% return, and you're like, you're like, walking, with clouds under your feet, feeling all good about yourself. And then you look back, 2 months later, and it's, double that, and you're like, wow, I
Mm-hmm.
can't believe I had. But, like, as a trader, you're never going to be there. Like, there's investing and there's trading, and it's
Right.
very hard to do both. And so, as a trader, you really just got to look at, like, for me, it's all about singles. It's all about base hits, and occasionally you'll hit a double, you'll hit a triple, or you'll hit a home run. But honestly, like, I and throughout a year, I'm comfortable just continuing to hit singles, continuing to hit doubles, and then if I have a couple of home runs here or there every couple, like that's fine. But you can make a really good living like just hitting singles and occasionally hitting doubles or triples. Like you don't have to swing for the fences. Again, it's all about risk reward. Like you want to be risking one to make three or four. You don't want to be risking three or four to make one. That is the easiest way to get out of the business. I promise you will never make it that way. So anytime you're getting involved in a trade, you should always say to yourself, like, here's what I'm risking. Like, here's the logical out. Here's what okay, can I feasibly make 3x or 4x that or 5x that? If so, then it's worth the trade, right? Tesla at $100, which just came from $300. All right, I like it. Maybe I'm wrong. Maybe it goes to 80, but at $100, can I reasonably get, $40, $50? Yeah, sure. Meta was another one post earnings back in 2022, November 2022, when it had that huge gap down. They changed their name. Like, everybody was like, oh, it's over for Facebook. It's over for Facebook. I mean, the guy just revolutionized like social media and like over the last 5 years prior to that, or 10 years prior, like it's not going away. Are they maybe not going to be like the forefront? Is there other platforms out there that might be better, that might take over market share and things like that? Sure. Is he crazy thinking hey, the whole world's going to be walking around with these goggles and like that you're never going to nobody's ever going to look at each other again? Yeah, probably. But again, like it's certain things. The stock was a $400 stock. Now it's an $80 stock, and in my opinion, worst of the worst is behind them. That was another one, like $80. You buy some, and that's more investing than trading. But eventually, you sell some at 140. Again, you sell it at 140. You bought it at 80. You think to yourself, "Oh my God, I'm a hero. I just made a killing." But then you look back and you're like, "Okay, now it's 320, and I could have retired on that." But that's trading versus investing, and so it's impossible to always be there for the whole move. But yeah, those are a couple of good ones. Roblox has been a really good trading vehicle for me. It moves enough. It's not that expensive of a stock, so you can buy enough size, get enough move where you can actually make some good cash flow. And then I am big on trading Qs and SPYs, more Qs than SPYs, but I trade the Qs all the time. I think, you can really find, 3-day moves that you can kind of take the other side, or setups where it reverts back to the ADMA or the daily moving averages, the 50-day, 100-day, whatever it is. And I really think you can, that's been a really good trading vehicle for me as well. And then just big cap in general. I find it easier to trade big cap than small cap. I like, penny spreads versus, 15 or 20 cent spreads. I think it's obviously a lot easier to manage your risk that way. And I like being able to buy size of something, when you feel good about it, and not get the slippage, and not, get the slippage on just the spread itself, but also on the size that you're buying. You should be able to, be able to buy what you want to buy or sell what you want to sell without kind of moving the stock. And so that, yeah, I mean, those are like, there's been a couple of good names that I go back to time and time again for me. But I would say probably Labu at the end of 2022 from 4 to 10. I mean, I had, for me, really decent size of it, and it kind of worked out in my favor. And it was kind of prior to that, I was in a little bit of a, not slump, but just, down on myself, like, hey, we just had a multi-generational low from COVID. And you look back at it, right? I was trading through 2008. And we all looked back in 2011 and we're like, oh my God, like I was buying LVS at $1, selling it at 4, went back to 50. Like there were all these stocks that you were like, that was a multi-generational opportunity we will never see again.
Yeah.
And then COVID hits and you get that same opportunity, but it's so hard to know like when is the right time to just take your stand and do whatever. And so while we did really well off the bottom in COVID, like again, it's like you're never going to be there for the whole recovery. If I was buying, COVID SPY, in 2020 at whatever it was, 240, like by 300 I'm out, by 320 I'm out. There's no way I'm holding to 460. Like, it's just impossible for me to wrap my brain around that as a trader.
Yeah.
Some guys could do that better than me, but I'm more of like a, again, take my single, take my single, take my single, and just don't do anything where you lose a fortune, and you could be okay.
All right. Okay, so we're at the 1 hour mark. One more audience question, and then I'll kind of give you a closing question. So we're going to go a little over because this has been a really
Okay.
great conversation. But Suzanne asked what you use to come up with the ideas that you focus on each day.
I use my group, Virtual Trading Floor. You get access to it by being a trader with T3.
Mm-hmm.
It is our chat room that we talk internally within. Um,
That's
and
the
that is
Pro
literally what
Desk
I use. Pro
Pro
Desk
Desk
Virtual
virtual
Trading Floor.
trading
Yes, the
floor.
Pro
Yep.
Desk Virtual Trading Floor that Derek is the moderator of, Derek Oldsmith's
Yep.
moderator of. He's in charge of. I contribute a lot to that. Pat
Yep.
contributes a lot to that. Some
Yep.
of our other traders that have nothing to do with, T3 company as a whole, nothing to do with business development, they contribute to it. We have a good, group of guys in there. It's funny, like, I don't, I know a lot of these guys just by their screen name and their handle, but I consider them
Mm-hmm.
friends. We're a tight knit group, and I've never met any of them a day in my, I've met some of them, but a lot of them I've never met a day in my life. But we have a
Mm-hmm.
really good group in there. That's what I use. I used to come in, like I said, prior to all this, like 4 a.m. I'd start looking at charts, but now honestly, I can get up at 7 or 7:15, 7:30, make my cup of coffee, sign into the Pro Desk, and everybody's posting the upgrades, everybody's posting the headlines, and I can literally just spend 30 minutes, 45 minutes reading through everything that was posted in there that morning, and I can develop that. For me, it's news. No, sorry. For me, it's technical setup
Mm-hmm.
that I like to see mixed with some sort of catalyst that's going to make that technical setup work. So you
Okay.
have a stock where the chart looks great, and then all of a sudden you got an upgrade with a price target upgrade, and the two firms upgraded it, and the third, like, all these things kind of layer in, and they create layers of probability. And the more layers of probability that you have that line up in your favor, the
Yeah.
better the chance of the trade working.
All right. So my kind of closing question for you, you have a long career in the markets. You've worked, as you mentioned, with on a personal level with a retail trader all the way up into the hedge fund portion of his career. And then when he retired, you chose T3 Trading Group. So what makes T3 Trading Group different from other firms? Why did you choose to come here?
Yeah. So I was never in the corporate world. I like so I had done really well financially up until that point.
Mm-hmm.
Um, but I certainly at 35 was not going to start going to like work for, like, no offense to anybody out there, like a Morgan Stanley or a UBS or something like that.
Yeah.
I'm not going to just jump into the corporate world at 35, like, and be 15 years behind the ball, even if I could. Not to say that I could, but I'm just saying, like, even if I had that opportunity, I probably wouldn't have. So I wanted to go to a firm that would allow me to kind of pave my own way, right, and give me the flexibility to trade, and at the same time, like, see opportunities where I could figure out what I wanted to do within that industry or within that firm. And I think building the business that we've built, and building like the desk that we've built is a perfect
Mm-hmm.
example of that. Like, Derek, myself, some of the other guys that work with us on biz dev, like, we really work hard to help our traders, or try to help our traders make money, but at the same time, like, we're trying to grow a business here, and we care about the business, and we're just as invested in ourselves as we are T3. And so
Mm-hmm.
for me, what I loved about T3, and this is kind of going to be a little bit of a pitch or whatever, but we'll end on this. What I
Yeah.
loved about T3 is the fact that I could use a smaller amount of capital than I would have to use on my own to get
Mm-hmm.
a vast amount of leverage, and
Mm-hmm.
not give up a tremendous amount of my profits, and really get to, you know, to get to whatever I would need to trade on my own. I can come in with, a fifth or a tenth of that, and I could still trade that same size and kind of grow and scale from there. And then
Mm-hmm.
obviously the reputation of T3, guys like Scott Redler and things like that. Like, the name's been around forever. They have a great reputation. And it was important to me to join a firm that had the FINRA and affiliation where you need to get licensed. I think that's really important to me. Like, you don't like, I didn't want to go to a place that was just some random place that had no kind of, regulation or anything like that. And so the point
Mm-hmm.
that they had no blemishes on their record, and they offer the levers they offer. I just liked the business model. And then honestly, I initially liked the guys that, Derek and guys like that. And that's what kind of kept me to stay. And, um,
Yeah.
I think it's a great business model for anybody that's looking to kind of, if you're trading a Robinhood account and you're like, yeah, this is fun, but like I want to kind of see if I can do it, but like I don't have, $100,000 or $1 million to put to it. Like, there's ways to come to a firm like us and kind of let us be the bridge between you being, the 20 million share a month trader and the 2,000 share a month trader, right? There's a
Yeah.
happy medium in between. And I think T3 and the leverage they provide and the kind of the business model they provide for traders really gives the ability to do that.
All right. There's Josh's pitch for everyone on T3 and why he joined the team himself. Thank you so much for this event, Josh. This was a really wonderful discussion. I think it was really beneficial for the audience. I'm putting, for everyone who's still with us live, I'm putting in the comments right now a link for our next event. Dan Darrow will be back with me next week. He's an options specialist. And if you've been here before, you've seen Dan before. He works over in the Alpha Team virtual trading floor with Scott Redler. So he'll be with me next week at 4:30 p.m. Eastern on Wednesday. Again, thank you, Josh, for today's event, and I hope to have you on again in the future. This is
Can
great.
I just say, if anybody wants to reach out to me about
Yes.
anything, talking
Mm-hmm.
trading, talking, how do you get involved in T3, anything like that,
Yep.
reach out to me on LinkedIn, or I'm sure maybe Greta can post my email address. I don't know how to
Yeah.
post
What
anything,
is
but
your
feel free to reach out.
Josh?
Joshua.Lefler at t3trading.com.
Okay.
Yeah. Email me, reach out to me on LinkedIn. I'm happy to talk trading,
Yeah.
business, whatever you want to talk. But thank
Yeah.
you for having me.
And he'll be back, guys. I'm going to have him back on here. So we'll have another one
I
of
will
these
be back.
discussions. Yes. Okay. Thank you, Josh.
Thanks, Greta. Bye.